other forms aside from tax incentives can we go through for soft money? Is there anything that we haven't talked about?
We talked about tax credits. We talked about pre-sales and loans. We talked about the fact that you can have a loan for the tax credits because the tax money might take so long to come back that you're going to. So then if it's a tax credit, you have to discount the value of the tax credit for what you're going to sell it to someone in Louisiana. You have to further discount it for the broker, and then you're going to have to discount it for the fact that you're going to have a lender use that as collateral so you can have the money now to meet your cash flow needs for post-production.
So maybe if you know you're going to get $250,000, you don't want to take a loan out for more than $100,000 to $125,000.
That's right.
To cover interest, to cover all the fees, and to cover the loss of.
And that's going to be more of a loan from a high net worth individual that is capable of making that type of film loan as opposed to a more established bank that usually the amount of work that's involved in a true film loan with pre-sales where a completion bond is also required, it's not, you're not going to be able to, you're going to be top heavy in terms of administrative and legal costs if it's anything under like $1.5 million, $3 million. Yeah.
Right.
The other things is you can have an active participant, a co-production deal with, say, a post-production house.
Deferrals.
Where they'll defer their things, they get a executive producer credit, and maybe you give them some profit participation to boot.
And profit participation, also known as points, is also one of the producer's most valuable bargaining chips.
And one of the things that I see so many producers, even well-experienced producers have been in it for years and years, that have no idea what points or profit participation means because there is no set language. Everyone is thinking of it in terms of different percentages. And it's really important that everyone get on the same page
about points
and understand what points mean.
So 100 points are what the producer has to give away. So let's talk about what that means as far as financially, because the producer's 100 points isn't really an overall 100. It's not a gross 100 points.
Well, I like to say there's the production company, and then there's the producer's share, and there's investor's share.
Right.
In the most vanilla manner, the investors are going to get their money back plus, say, 10%.
Right.
And then there'll be a 50-50 split between the investor's share and the producer's share.
So let's just say it's $1 million. Your investors give you, let's just say it's all equity. They give you $1 million. Mm-hmm. That means that when you make $1 million, that all goes right back to your investors.
And then another 10%.
Another 10%, you get another $100,000. And then anything over that is a 50-50 split between producers and investors.
So 100% of the producer's share equals 50% of the overall production company share. 100% of the investor's share equals 50% of the overall production company's share. So you are going to be able to give away only the portion of points that is reserved for you from your producer's share. Your investor's share is sacred. You don't touch their percentages. Right. There are a number of highly respected, wonderful entertainment attorneys that just represent talent that I know and love, that every time we do another deal, these are brilliant, brilliant minds. At every time we send that over, they think 5%, they're like, well, that's 5% of the production company.
No, and 5% of your piece.
And these are absolute brilliant tax minds, everything. Yet every time a deal comes over, they automatically forget and say, well, oh no, isn't the production? Because they're hoping that maybe there'll be a production counsel on the other side, or they won't have production counsel, and they wind up regularly, producers without an attorney watching out for them, giving away 5 points from the production company rather than the producer's share, and you've just given them twice as much as you should, and now you're in a position where you either have to go to your investors and say, I know I have a contract that you're supposed to have this much, will you take less? Or you have to pay twice as much out of your own pocket.
Right.
So understand what points mean.
You only have 100 points out of your half.
And you could create a cast and crew pool that of the points from your half, which is 50, your 100% is 50% of the overall. Say 20% of that 100%, or 20 out of the legitimate 50, is just for cast and crew. So you're going to save 30. Under no circumstances are you ever going to fall below 30.
Right.
And then the cast and crew divvies up on a pari passu basis the 20 that you have set aside for cast and crew points.
Right. And points, again, are another way to sometimes get production companies to defer expenses, another way to get bigger actors that a budget may not sometimes allow for. If you have a great script, it's a passion project, maybe somebody who normally gets $1 million payday would potentially consider doing that project for $500,000 if they get a higher percentage of the producer's points. Would you say that's fair?
That is fair.